Hello guys, and welcome back to yet another stock analysis video on this channel. If it's your first time here, my name is David, and I'm going to be talking about Air Canada stock, which is Canada's largest airline company. Currently, the stock is down over 50% from its recent highs and is trading at a trailing PE of under 4. So, as many of you may already know, due to the recent Rona outbreak, the airline industry as a whole has been absolutely decimated with no one being able to travel. As a result, many investors have decided to purchase US airline stocks such as Delta and Southwest because they are down 60% from the recent highs. Now, I looked into these US airlines and I immediately turned down the opportunity to buy these airline stocks. Because of liquidity issues, the abundance of domestic competition, as well as future lack of demand, I saw this as an extremely unfavorable risk-return investment. Now, what exactly is the risk of buying these airline stocks if they're just bailed out by the government anyway, you might ask? Well, if an airline company is not able to pay off their debt, they must file for something called Chapter 11 bankruptcy. And no, I'm not referring to any sort of book, that's just what it's called. And basically, what it means for shareholders is that the stock price goes to zero and they will own no shares of the company. That airline may choose to restart after filing for bankruptcy, like many have done earlier on this century. New shares would be issued, and guess what? You wouldn't own any of them. In fact, Air Canada had actually filed for Chapter 11 bankruptcy in 2003, due in part to recent acquisitions as well as the large amount of debt they were carrying. And this brings me to my first reason as to why I plan on increasing my position in Air Canada stock. Ever since 2003, Air Canada has been focusing on increasing their cash position and ensuring they don't take on too much debt to handle so they don't go bankrupt again. If we take a look at their balance sheet and compare it to US airline companies, we can see Air Canada has a far superior current ratio as well as cash ratio, which makes it far safer from a liquidity standpoint. Secondly, if we compare airline competition in Canada versus the US, it becomes quite clear that there is a lack of competition in the Canadian airline business. Canada's airline business is pretty much a duopoly consisting of Air Canada and WestJet. Very little competition leads to a greater market share. And in the US, God knows how many major airline players there are with varying amounts of market share. When the demand slowly starts to increase, the US airlines will be desperately battling for market share. Now, my third reason for choosing Air Canada is their lack of overall share buybacks. In the past, Air Canada has been criticized for buying $800 million of shares in the past 5 years, but this pales in comparison with US Airlines share buyback programs. For example, let's take Delta Airlines, which spent $11.4 billion in the past 7 years just on buybacks. I believe, as a result of the lack of share buybacks as well as the lack of dividends that Air Canada pays, the company has been able to reinvest their earnings back into the business, and their recent growth has reflected this. Simply put, the company is much better at allocating their capital. They understand the airline business is very cyclical, and performing buybacks and adding dividends will only hurt them in the long run. Lastly, there is a chance that Air Canada will receive a bailout, as Prime Minister Justin Trudeau said he recognized the industry had been hit extremely hard and that help was on the way. This is very reassuring, and I truly believe the Canadian government wouldn't let one of their major airlines go bankrupt, especially considering how responsible Air Canada has been in furloughing employees, cutting salaries, and overall just trying to minimize their cash burn. Now, I don't doubt it will take years for this company to recover to what it once was before this whole crisis. I do believe there is a very low chance of this company going into bankruptcy, and I think any price under $17 is a very good long-term buying opportunity. Now, currently, Air Canada represents around 6% of my portfolio value, and if that share price drops to around that $17 level, I plan on adding to my position. Alright, so that is going to wrap up my thoughts on Air Canada stock and why I will be increasing my position if the share price drops further. If you guys enjoyed, please feel free to like, comment, and subscribe, and let me know in the comments what you guys think of the airline industry as a whole, and more specifically Air Canada. I'd love to hear, and as always, have a wonderful day.